Seems like everything's basically up at this point, except for Bitcoin. The liquidations in the market were the biggest we've ever seen. And that can take a while to wash through. Retail's made no money this cycle. It's just a very different ballgame now. I have some broader concerns on this mNAV compression across the industry. I want to watch very closely over the next 1-2 years as the bubble unfolds. Within 2 to 8 years, quantum computer will exist with enough qubit processing power to effectively break Bitcoin. It could be the biggest bear market we've ever seen. A lot of the other developers in the space, they're ignoring the reality of it. If it's not agreed on next year, I think it's too late. It's a bit of a perfect storm of events in the last 12 months. The people I talked to that have been around heavily in space have been reducing their allocations. I see it's going higher in the next 6 to 12 months. That could flip in a week or a month.
People who are convinced that we are in the final quarter of the bull run. But then when we have a look at all the factors that you've just described, it really does look like, no, there's quite a long way to go.
$1 million a coin is possible in the next decade, but there's risks we need to address.
Archie.
Charles Edwards, welcome. I think we've interviewed once before on Spaces, so this is a real podcast and we're face-to-face, albeit via sort of Zoom Riverside. So welcome back.
Oh, thank you. It's great to be here. I think it's actually, we've done 2 or 3 even.
Have we?
Way back in 21, 22. It's a long time ago, but yeah.
I do remember the last one that we had, but thank you for doing 2 of them then. So this is the 3rd appearance. So I'm very happy about that. I was actually pleasantly surprised that you're a fellow Australian as well. So it's like, because I'd always known that you were sort of floating around. I didn't know where you were from. That indicated the hash ribbon indicated that you pioneered, you developed, was something that, you know, when I was new to the space 5 years ago, I was like, wow, that's fascinating that it's just every time it fires, or almost every time it fires, it's a pretty reliable buy indicator. And like, who is this fella? And then I found out you're a fellow Aussie. I was very pleased about that. I don't know why it pleases me to learn we have a fellow Aussie in the Bitcoin space, but it always does.
Oh, yeah, no, thank you. When I was living in Germany for 4 years, I think when we first had a couple of shows, and then came back to Australia 2 years ago. So there's not many of us in this space in Australia.
Well, it's me, you,
these days.
Checkmate is Australian, right? Is he from Queensland, or where's he from?
I'm not sure. I think Sydney, not sure.
I don't know where he's from either. Who else? There is Stefan Livera, he's Australian?
I'm not sure, yeah.
You don't know? There's Svetsky's Australian. How many others? There's
So what are you doing in London then, Archie?
Running away. Like we always, like everyone here is running. No, I just felt a calling.
Probably boring conversation for most people, but pretty classic journey for Australians to spend a year or 2 or a couple of years working in London.
So let's talk about you. What are you doing at the moment? There's huge things happening in the Bitcoin space. Particularly the volatility of last Friday. Hopefully we get this interview out in time, but we're recording this on Tuesday the 14th, and 4 days ago we had a market meltdown as a result of Trump and China reigniting what could be a tariff war stage 2, but I'm guessing that they're going to walk all of this back. What was happening in the market? We can talk about Bitcoin and crypto, because when we have market meltdowns, it's all one market, really. But I'll throw that over to you to tell us what you think about that.
It was a pretty big headline in terms of Trump said basically out of nowhere he's going to increase Chinese tariffs by 100%. So that was kind of reminiscent for me of what he did in April with his big tariff day back then, where he unleashed that whole board of tariffs for all the countries. I think, don't quote me, but I think China's tariff rates then were about 75% or maybe even more. And so as soon as I saw that tweet, I'm like, okay, the order of magnitude impact is probably going to be somewhat similar, at least in the near term. So it's a big market shock. And so, yeah, we saw everything obviously collapse, all one trade, as you mentioned. And then for me, is like thinking through, okay, what's the likely outcome from here? We know he can't allow the whole economy to collapse. He's coming up to midterms. He needs to get votes. He needs to see strength in the economy and a good result for his voters. We know he's not going to increase the tariffs again by another 100%. I figure that's like basically zero chance. So he's probably, as you mentioned, going to kind of negotiate it down maybe to zero or some very low percentage of what the original 100 was. So he's done it to get some movement in direction he wants in China and open up discussion and negotiate, I suppose, the process. So I think whatever that number is put in now will probably drop at least 80% in the coming weeks and months, if not 100%. So eliminating everything he said. I think the market pretty quickly realized that when he somewhat walked it back on the weekend, said, don't worry, basically. And yeah, the S&P 500 rallied again, regained 50% of its losses. Gold is just pushing new all-time highs again. Bitcoin obviously bounced a bit, but it's probably the worst performer in the category. It seems like everything's basically up at this point, except for Bitcoin, which is a bit of a shame.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security, backed by insurance and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini. Bitcoin with confidence. Need cash without selling your Bitcoin? With DeBiFi, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling. Just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, DeBiFi gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's DeBiFi. DeBiFi, your Bitcoin, your money. Well, it was bouncing back up to almost 116,000, and as we talk now, it's just under 112. That could be, just a fairly natural sort of bounce and retrace as well, or it could be, portend for worse things to come. The interesting thing about this episode in the trade war, maybe it's a fake trade war, is that it was perceived by Trump as being instigated by China. China has since come out to allay those fears, to say, no, it was just a letter to our trading partners about the process through which rare earths could be exported. It wasn't indicating that there would be a ban. And so already we're seeing China walk it back somewhat. Trump perhaps will do something similar. So maybe this is all about not much at all, and the markets just were primed for a bit of a reaction to anything.
Yeah, I think so. I think there's that. It's also October, and everyone in the crypto space knows that October is historically the best month, and it's called Uptober, and I think everyone positioned accordingly. Especially altcoins, of course. Many were down 50, 60, 70%, and the liquidations in the market were pretty out of control over the weekend. The biggest we've ever seen dollar-wise, and coin-wise biggest in at least 4 years. So pretty crazy amount of leverage that was washed out. And that is, as two considerations. One is that, it's good. There's less leverage in the market, so it's healthier to go forward. But the other part is that a lot of people have been severely hurt and many financially ruined. And that can take a while to wash through. We saw similar, obviously this is not as significant recently, but we saw similar events with the mining ban in China in 21, where it just had this huge liquidation event, and then took a couple months to kind of work through that and recover. So it could take a while. I'm not suggesting it's the same as that, but I'm open-minded to us we could have a V-shaped recovery, but I'm also open-minded to spending another month kind of chopping around to see where this goes, because a lot of people have been obliterated basically over the weekend. If you had anything over like 1.5x leverage in altcoins, you are completely wiped out, and a lot of people are trading over that.
What does it say about the market that alts many of them were wiped out between 50 and 99%, and Bitcoin merely had what, a 10% dip?
Yeah, it was about 15, I think, but yeah, nothing comparable. I think it's summarize the key difference of this cycle being institutional, driven by ETFs, Treasury Companies, banks, and in funds and pension flows, all that sort of thing, all into Bitcoin, and minimal or relatively minimal in altcoins. So a lot of retail, there's memes going around on X, for example, that retail's made no money this cycle because they're all in altcoins. A lot of retail is trading altcoins, and at least relative to the entire asset class, there's the institutional assets more placed in Bitcoin, and they're not selling at 4 a.m. in the middle of the night because of a liquidation event. And they're also not as leveraged, right? They're mostly holding spot or ETFs, which have most cases, no leverage.
So what are the consequences or implications for the attempt to replicate Bitcoin ETF success with other so-called crypto coins?
I mean, I think they're coming. I don't have a strong view there, except that relative to their current market caps in crypto, it'll probably be similar for the ETFs. Like, people will want exposure, especially to the major L1s like ETH and Sol. At the institutional level, there's Treasury Companies forming for those now, also for Sol. So I think that they've all got some place, but the main trade definitely this cycle is Bitcoin.
Yeah, it seems that if anything, what this market crash has done is put the focus on Bitcoin's quality and a different level of investor who's been coming into the market to give it much more stability. And we're seeing that in the broader cycle, aren't we? Like, we were just talking about that before. It just looks and feels different, like a very prolonged 2016 build-up. I'm not suggesting that we're going to have anything quite like a similar parabolic blow-off, but it just feels like there's a really long run-up, a very consistent. I think others have called it chop consolidation. As soon as we have a leg up, we just have 6 to 9 months of just consolidation within a range until the market feels like it's ready to go again. I still feel like we're in that range right now. There's absolutely no panic in the market that I can see. How do you see that?
Yeah, I pretty much agree. It's a function of how big the asset class is as well. Bitcoin over 2 trillion or around 2 trillion. It just takes a lot of money to move it. So things move slower, volatility drops. We're seeing that consistently through the cycle, that volatility is compressed. The dips are shallower. The drawdowns are less significant. You used to be able to basically bid a 30 or 40% pullback every cycle for Bitcoin, and it'd be pretty great dip opportunity. And we've barely had any of those at all this cycle. So yeah, I think it's just a bigger beast. It moves slower, needs more money to move, and it's also got this institutional bid, which we can pull up some charts, but the institutions at the moment hold about 12% of all of Bitcoin, which is pretty crazy to think about, and that's gone up from 4% just less than 2 years ago. So that's a massive shift, and they're, for the most part, not using leverage, so they're not creating those big volatile moves up, and they're, for the most part, holding longer term. So, reviewing on a quarterly cadence, if not less frequent, buying and holding long term, as opposed to prior cycles where we saw lots of trading, lots of leverage, perp contracts dominating the market. It's just a very different ball game now.
Is that coming through ETFs predominantly, or derivatives, or how's their exposure coming?
Treasuries are about 5.5%, and ETFs are almost 7%. So the gap's closing though. So I can just share a chart. Yeah, so about Yeah, 12% for the total percentage of market cap, which is in institutional holdings, which are defined here as ETFs and Treasury Companies. And Treasury Companies here in orange are about 5.5% and ETFs about 7%, but the gap is closing. The Treasuries have been buying a lot in recent months.
Yeah, we might see an uptick in that because I think MicroStrategy, they're still buying, but they're not really buying in at the level that they were. But my eyes on what Metaplanet's about to do in the next 6, 7, 8 months with what's happening in Japan, and it looks like they've got some big plans over there as well. I mean, suddenly they just started buying, hundreds of millions of dollars worth of Bitcoin, something that they weren't previously capable of doing. But it feels like the market is now very responsive to them. So it will be interesting to see whether or not their purchases reached a scale of what Strategy has been able to do since last November. Because a similar thing happened to them. There was some kind of inflection point around November last year, 2024. And then from that point onwards, they were just buying billions every other week.
Yeah, I can see. So this is just Metaplanet. These green bars are how much they've been buying in the last month or so. And yeah, you're right. There's a massive jump there. So they've obviously unlocked some good capital. Yeah, this is a bigger topic, but I have some broader concerns on this mNAV compression across the industry.
Let's get into it.
Well, so you can see it here. This is the mNAV of Metaplanet. It was probably on average around 2 or 3x, and it went up to 7, and now it's just above 1. So it's compressing to 1, which you'd kind of expect, I think, in the long term. It's very impressive. They've been able to kick up that yield from those massive buys they've had recently that you just touched on. This is their share price. It's kind of bled out a lot. So what is that down? That's pretty wild. Yeah, it's down about 80% in the last couple months, which is, Bitcoin's not too far off all-time highs. But that is also summarized across the board, where you see the average mNAV across all treasury companies trends down with time. That's not too surprising. And then this is what I find more interesting is the percentage of all treasury companies. So there's about 180 of them. It is 186 to be exact. There's now about 25%, that's a blue line here, of treasury companies with an mNAV less than 1. So what that means is the value of their Bitcoin holdings as a percentage of their equity is, it's the value of their Bitcoin is becoming worth more than the entire company. And this here includes debt and everything. That's concerning because if mNAV is above 1, you can easily issue equity. It's great. It's accretive. It's good for shareholders. You can buy more Bitcoin and grow your relative yield. But when it's below 1, it's dilutive, so it's bad to issue equity, generally speaking. So you got a few options. You can raise debt and increase your leverage risk. You can potentially sell some Bitcoin or some holding or something of value to buy back more stock and close the gap. Or you could potentially abandon your Bitcoin strategy altogether, right? So all these options are not so great for Bitcoin because they create some sell pressure, except the debt, right? But that adds leverage to the system. So that's why the mNAV compression is something I want to watch very closely over the next 1-2 years, because if enough are below 1, it's going to incentivize use of debt at the very least. And then we have to be really careful to monitor the leverage ratios of these companies. They're still quite healthy today. The sort of the debt to Bitcoin value, the debt to the enterprise value of the companies, debt to equity ratios, they're all quite healthy still in the sort of 10, 25, 30% region. But, they can change very quickly and spike. So this is a topic I'm watching very closely. Right now, I said it's all great because they're buying about 500% of daily supply, the treasury companies. So huge buy side pressure. I see price going way higher as a result, as long as that continues. But we need to kind of carefully track these things as the bubble unfolds.
So why was the mNAV at multiples of the value of the Bitcoin holdings? Was it optimism about the Treasury Companies' ability to accumulate at a certain pace, or was it a novelty of this sort of company vehicle? What happened for the market to reward these companies with a multiple greater than the value of the Bitcoin?
Yeah, all of the above. I think it's a bit of a perfect storm of events in the last 12 months. The key driver is MicroStrategy, obviously, is being a huge success story the last 5 years. They've crushed every company in the S&P 500, and they've just completely outperformed, NVIDIA as well. And so I think a lot of companies look at them and say, well, how did they do that? And, just scale their company so massively in such a short time. And then all they did was buy Bitcoin at a simplistic level. Obviously, there's a bit more involved in that. But I think that's quite an attractive value proposition when people see Bitcoin on average going up, say, 40, 50% a year. The cost of debt being less than 10%, you can obviously arbitrage that traditional financial market, and as long as those things remain relatively constant, get a great result long term with the use of leverage. So that's the key motivating factor. A lot of these companies that have become treasury companies were loss making or had share prices that were trending down, or were very small businesses. Like Metaplanet was a hotel business, not doing well over the prior years. So they had incentives to kind of look for ways to break out and do something different. I think in the early days, when it was just MicroStrategy and then a few others, you had a very significant value prop to add. We're going to do what MicroStrategy did. You go to investor base and say, can I raise 100 million, a billion, what have you? And he said, we're copying this. We're doing it in Japan. We're doing it in Europe. We're doing it somewhere else. Different market, different opportunities. And that, I think, is quite a good value prop. And drew in a lot of capital. Then at the same time, we had Trump come in to become president, right, in January election. And that was significant because it was a pretty polar outcome in the election. If Trump didn't win, the crypto asset class would have been probably a mess now. As we know, we had Choke Point 2.0. All the banking on-ramps into Bitcoin were shut down. Our fund, which had been running for 6 years, also was debanked twice in a 3-year period for absolutely no reason other than the bank was tapped on the shoulder to discard of crypto entities. So there's just no capital coming in of substance. So that was completely flipped in January. And then we had the whole stream of executive orders, obviously, the digital asset or the Bitcoin treasury that the US has established, but also all the stablecoin acts, Genius Act. So it's kind of basically said, the SEC also coming on board, right? We got rid of Gensler and it's become very crypto friendly. It just basically sent a really strong message to Wall Street and essentially the rest of the world as a result that Bitcoin's here to stay. We're open for business and big capital can come in. We've got clear legal and regulatory boundaries now. And on-ramps just flooded. And I think you combine that with success of MicroStrategy and businesses like, let's go, let's do this. And that worked really well at first. And you get these huge multiples, typically 2-3x NAV when they raised and launched. But if you're number 200 treasury company, what is your value prop, right? If you've got 50 others on the NASDAQ or what have you, why should I invest in you? And what are you going to offer me over and above MicroStrategy or just a Bitcoin ETF? So at this point, it's kind of diminishing returns. I think if you want to raise a treasury company now, you have to really have something unique. Whether that, I don't know what the answer to that is. It could be a brand new market like Metaplanet was in Japan. It could be access to some unique investor base or having some special deal with a bank or something in terms of what you can get, credit loans, whatever. But I just think that the run-of-the-mill treasury company is going to really struggle going forward, and the mNAVs are going over the long run just going to continue to compress to 1. There'll be mini hype cycles. If Bitcoin goes to 150K this year or 180K next 6 months, right? I'm sure treasury companies will see a new wave, completely pump up again on that hype. But I think you net it out, and the trend is definitely towards 1 over the long term.
Do you think there are any other catalysts besides from the Bitcoin price spiking that could set off these treasury companies?
I'm open-minded to it because we've been in this market long enough. We see funny things like that happen. I can't pinpoint something right now except for maybe some big regulatory change, like the Fed, if they started QE or something, or if there was 5 rate cuts instead of 3 in a short period of time, some kind of an event like that, which was a catalyst. But I just, I can't find one for you right now. Otherwise,
it does seem like there's still no shortage of Bitcoin Treasury companies that are being created. So they must be getting some kind of signaling from the market that there's an appetite for this. When MicroStrategy first started, I think they've changed their capital structure quite significantly in the way that, and also in the way that they're raising capital since last November with, is it their preferred perpetual?
They've got so many products now. Yeah.
And so, they're being really innovative and quite aggressive in pushing new products into the market. I think the market has responded quite well to that. But do you see any pools of capital that have not yet been tapped? I mean, I'm not suggesting for a moment that we've exhausted any pools of capital, but there are trillions and trillions of dollars of capital out there, but not all of it can access Bitcoin at the moment.
I mean, there could be something I haven't thought of, but they've tapped into pretty much every market, right? Equities, convertibles, warrants. There could always be something else out there, but I think it's diminishing returns at this point. I think they're gonna. I think the main value prop is they can generate some form of yield on the Bitcoin in the long term, whether that be through, I think at some point the raising debt and equity is not going to be the business model. It's going to convert to something where they lend out their Bitcoin and get some kind of rate, right? So that's the kind of, and what is that? Is it, you've got lending platforms now for Bitcoin, and you might be able to get, I think the average would be 1 or 2%. Some have 3 or 4% yield per year. So perhaps long term they could get somewhere around there. Maybe it's 4 or 5%, even if they've got some unique offering. So then you could argue, okay, the value of the company, again, I'm talking multiple years out, 5, 10 years out, it might be that extra 5% on top of, an mNAV of 1 or something like that. So there is a case for that. And then the question is, what's the competition? So I think at the ETFs obviously can't do that right now, but I expect there'll be other products available in 5, 10 years that can do things like that. So it's just going to become really competitive. But I think their business model long term will be utilizing their Bitcoin as basically as a bank, a Bitcoin bank. I don't think the current format of just issuing debt and equity is going to be sustainable beyond 5 years from now.
So Saylor famously said that, the fixed income market is worth hundreds of trillions and he wants a couple of points of that. So how long do you think something like that could take? Is that a realistic possibility, first of all? And how long would something like that take? Because in the context of what's happened to gold recently, gold has put on 4.5 trillion in market cap in 6 months, 9 months. And people have always been saying, well, Bitcoin can't go up much further than where we're already at, because where's the money going to come from? And it's like, well, gold just did that. Where's the money coming from for gold?
There are some different factors with gold, though. Like some of the banking acts were changed 2 or 3 years ago so that gold could be used as collateral by banks. That wasn't allowed. So that literally unlocked just billions and billions and billions of flows in the last few years. And then you have factors like China and Russia accumulating a ton of it on the back of, lack of trust, I suppose, and isolationism globally. The US controls they put on Russian assets a few years ago. So rising populism globally. And the kind of the breakdown of globalism globally has driven a lot of interest in those hard money assets and less trust relatively in the US dollar. So you could argue why not Bitcoin as well. But I think the banking change in regulations there is the really big driver. And secondly, gold's just got thousands of years of trust behind it. We Bitcoiners are relatively still, as against the whole population, a small percentage. So that can change. though this is another topic altogether, but we can talk about later maybe. But I see a really growing and starting to become relevant risk with quantum computing, and it's starting to get talked about more. And I think that is going to be a headwind until it's solved, because there's a lot of things there that are not being discussed that are significant risk factors for Bitcoin in the next 2, 3, 4 years. And I just don't see us capturing the same flows as gold until something like that is solved on.
Well, that's a really interesting point because, I'm not a very technical person. I don't have the pedigree to be able to have a strong opinion on that. But from what I've seen from people who are technical is that, whatever risks are posed by quantum computing will be solved also by quantum computing. What do you think about that?
I guess what you're saying, there are solutions, right? This is all somewhat solvable, but there are complexities to it. There's various Bitcoin BIPs, so Bitcoin improvement proposals to change the code to make addresses quantum proof, for example. Jameson Lopp's got one. There's a couple others out there. The problem is not necessarily the technical side, but getting consensus and movement to agree on a solution. So if we all agreed today, okay, this is what we're going to do, we're going to migrate everyone to quantum proof wallets. This is the solution. We're happy with it. It's going to take at least 6 to 12 months just to get everyone in the network to move their coins to this new infrastructure. And that's best case scenario. So just based on the limitations of the transaction throughput in the blockchain for Bitcoin, 10-minute blocks, etc., it would take 30 days just based on the current traffic to move coins from one wallet to another. That's if there's no other organic traffic. If you want to then do a test transfer, right, because you're moving life savings, it's 60 days. So you want to allow for the organic traffic, double it again at least. So you're looking at least 6, 12 months to get everyone to move across to quantum proof solutions. So we've got a 1-year lead time at the best case. That doesn't necessarily solve the other big elephant in the room, which is Satoshi's coins. So there's about 1 million coins that are lost by Satoshi. There's another few million, right, of other lost coins or unclaimed potentially wallets or who knows what, coins, which are exposed with their public address. So exposed public address is the biggest risk because a quantum computer can basically back calculate the private keys from it. All of Satoshi's coins are exposed because they're on an early signature methodology that Bitcoin used at the time. So there's basically a gold mine there of, call it $100 to $200 billion, give or take, probably more onto the upside for a quantum machine in theory to capture on, right? So how would that look? Within 2 to 8 years, we don't know the exact number, quantum computer will exist with enough qubit processing power to effectively break the Bitcoin elliptic curve cryptography. And that's based on needing 2,330 qubits, which is what this big white paper scientific study found a few years back. And the people who wrote that were doctors at Microsoft, IonQ, the biggest quantum company in the world, Meta. So these are pretty heavy hitters. That kind of qubit range, 2,300, is forecast by the top 4 quantum companies in the world to happen between 2028, 29, 2030. So 4 or 5 years roughly on average. Some forecasts are earlier. And then that's just one paper, but then add in all the other kind of leading players in the field. McKinsey is saying Q days within 2 to 9 years. That's when you can break RSA encryption. RSA encryption is stronger than Bitcoin's ECC. So Bitcoin ECC breaks years before that. Jameson Lopp thinks the risk is 50% within, I think he said 4 to 7 years. But basically anyone who's paying attention to the rate of qubit growth, which is faster than Moore's law and linear on an exponential curve, and there's nothing slowing down, is basically expecting somewhere in that range, 2 to 8 years with a very high probability at sort of 4 or 5 year mark. The Department of War in the US recently said they think that Q-day risk is very real within 3 years on the aggressive side, right? That's obviously like a worst case scenario, but it's some probability, right? So the question is like, what are we doing about it? Because the first piece of meat on the chopping block is Bitcoin. It breaks before all other encryption, and it's also the biggest honeypot, right? You can, in theory, you probably wouldn't go after Satoshi's coins because everyone's looking at that wallet. You'd probably go after some other big wallets that haven't moved their coins in 8-9 years or have public addresses that are pretty stale. There's billionaires out there with hardware wallets in safes that they're probably not actively monitoring. You'd probably go and steal a bunch of those coins and just start slowly selling it out. And then if things start to become public, then you just nuke Satoshi's coins, right? So we have a pretty big risk out there to address.
Wow.
Yeah. That's why I've been monitoring this field for a couple of years. Our fund has been investing in the last couple of years because I've been seeing significant change in it. I just have always been interested in quantum computing because I studied a little bit of quantum physics at university. I'm no expert, I wouldn't claim to be, but it's a significant risk factor. And it's not like it's all solvable, but the problem is the lead times and getting consensus. Well, it's not all technically solvable because the Satoshi coins and the who's going to move them, who's going to upgrade them. That's the other risk factor. So there's two problems. One is getting the majority of coins across to quantum safe wallets and systems. It also means all brand new hardware wallets, all the ledgers and everything, all in the bin. They have to be replaced. So significant work has to be done. And that's why I've kind of been getting really vocal about it in the last few months, especially because I'm like, I'm just sounding the alarm now. I'm not going to stand by anymore on this. And I think it's starting to impact price action because people are, talking about this. It's also in ETF disclaimers now. The Department of War is talking about quantum, right? Trump's meant to have an executive order coming out for quantum computing soon because China's spending double the US on quantum and you can't lose quantum supremacy. So it's becoming a big topic. And I think more and more billions are just going to flow into this research and take it a lot further. So I'm kind of getting really vocal on it, and I really want to see a solution for Bitcoin agreed on, right? Not necessarily rolled out, but agreed on next year. Because if it's not agreed on next year, I think it's too late. If it's agreed on next year, then we can roll it out in theory, best case, by 2027, which is 2 years from now. And then that's at the front end of the quantum risk, right? We can't afford to be 1 minute late. If maybe it's 2% chance or 5% chance that there's a quantum risk in 2027, 2028. But if we're 1 minute too late, it's over, right? Like the trust of Bitcoin is built in the code. Its whole entire value is based on trust and not having to trust other people trusting in the code. But if you can't trust the code, this thing collapses, in my opinion. So
what's the developer community doing on this and sort of other prominent people in the technical community like Adam Back, Nick Szabo has recently become reactivated on Twitter. Do they have positions on this?
So they do, and they all have kind of varying positions. Jameson Lopp is the one I'm most aware of, Bitcoin OG, core developer, that's really kind of speaking about this at conferences as well. He's a bit more conservative, saying that the risk is, as I think I said, don't quote me, but 4, 5, 6, 7 years out. But that's a 50% risk, right? So if the 50% risk is 4, 5, 6, 7 years out, China's spending double the US. We don't know what their government research is doing, right? So the real risk could be 3 years out or 4 years or 2.5 years. So we don't know the exact number. So the point for me is that we need to get in early, or if you're 1 minute late, it's too late. It's over. So they do have tech solutions for wallets. Like I said, the Bitcoin improvement proposals, but it's getting consensus and action on this. A lot of the other developers in the space are, I don't think, following quantum enough. Not to name names, but they're basically saying it's 10 years out or 20 years out, but they're ignoring the reality of it. Jensen, CEO of NVIDIA, said in January, quantum's 15 to 30 years away, and the entire quantum market nuked 60% in the next 24 hours. But then 2 months later, he said, I was wrong about the timeline of quantum. And then in June, he said, we're at an inflection point now with quantum. And then last month, he was investing billions in quantum. So I think he didn't really understand where it was at. And I know a lot of the quantum companies have been talking to him since, like getting heavily involved. And he's now investing deeply in them. And they have a quantum product. And they're basically part of the quantum development process now as well at NVIDIA. So it's all happening. Yeah.
There's always the risk of a ChatGPT moment as well, where nobody was really expecting any kind of
That's exactly it.
AI application to take hold of the world, and it just exploded on the scene. And that really set the cat amongst the pigeons, because I don't think even the AI industry was expecting anything like that.
That is exactly, that's what I've been also saying a lot recently, is it's like waiting its ChatGPT moment where, I think Altman even said, I heard him say a couple of years ago that, ChatGPT 4 or 5 years ago, so call it 2020, was just terrible, right? Like the product was just horrendous, but it's just on an exponential curve. So like if you use quantum today, you'll hear a lot of people saying, oh, it's useless, you can't do this, or the downtimes are really high. Yeah, okay. It's an average product today, but nonetheless, it's still being used in medicine, drug discovery, and bond markets by HSBC in showing like 30, 60% improvements in efficiency in various use cases already in multiple industries, in the defense space, many places that has utility today. But obviously still it's super niche, it's super early, the systems are not that robust yet, right? But like you said, you just follow the trend, right? it's an exponential trend, and it's doubling every 18 months faster than Moore's law. And it might be 2 years away, might be 4 years, but there's going to be that ChatGPT moment, I think, where they just unleash thousands and thousands of qubit capability, and it'll just impact every industry. And you're either on quantum proof communication systems and security, or you're not, and that's where the risks are.
So, I mean, the quantum risk is not just to Bitcoin, it's to the entire digital economy, all of the digital infrastructure, and that's, real world infrastructure too. Like everything is digital. Our water infrastructure, power infrastructure, gas, everything is digitally managed now. So like these are also at risk. So my question is, like, why aren't we seeing a broader discussion around these risks in in politics, in the media, amongst experts, in a similar vein to what we saw with the lead up to the Y2K bug that didn't eventuate. Not to suggest that this is any kind of hoax. It's very real, but we're not seeing any kind of urgency or an acute sense of danger.
People don't realize what is happening there. There is, $55 billion is being committed globally by governments on quantum proofing systems and quantum development. The US recently increased it by $4 or $5 billion, so they more than doubled it a few months ago. And as I said, Trump is expected to release an executive order on this soon, because China's spending like 16 billion on it. Most TradFi banking systems have already upgraded to some form of quantum proof encryption, so they're not really at the same risk. Those that are an RSA, most banks, as use 2FA, right? So if you have 2FA, you're basically quantum proof in a format, like as long as you've got the right 2FA, and you've got a device where it's not, that isn't exposed in some format, right? A quantum machine can't just, it can maybe guess your password, but if you've got 2FA, it can't do the two things at once, because you've got 3 attempts, right, with 2FA or what have you. So actually most TradFi stuff is quantum proof in some format. Obviously, there are things that will be exposed, like you mentioned, power, or could be any form of infrastructure. There'll be gaps, right? We're not going to capture everything. I'm sure there will be quantum hacks that become known in the future. Quantum supremacy is a really big power, right? If you've got the best quantum capability, and China does have the best machines today, then you have some significant power. There's also, argument that people are collecting data now, like that is encrypted in RSA or what have you, spy intelligence type things, and with the intent of decrypting later to uncover secrets. Obviously, there'll be historic secrets at that point, and don't know what the value of those is, but yeah, there'll be a lot of things that come out of this, and things that will, it's like we get hacks today, right? How many data providers and platforms and Dropbox and all these different things have had different hacks and formats that have exposed information, leaked papers, and caused issues for users. And I think we'll get more of that. At the same time, there'll be other opportunities, because if you have post-quantum communication or quantum processes to basically encrypt your data, it can be effectively hack proof, or you can always have visibility of who's inspected the data or if it has been inspected, sorry. So there'll be all sorts of new systems that come out of this, and society will move on and develop and adapt as it always does. And I don't think it's necessarily a huge threat long term. As I said, I think most financial providers and governments are looking at this really deeply and adapting to it. My main concern with Bitcoin is not that we can't fix it. It's just that this network is historically really slow, and that's why I'm getting really vocal on it. I'm optimistic we'll get there and solve it, but we need to move on it really fast. I want to see it solved in next year, to be honest, because I'll have significant concerns if we don't. And then we also have to have a debaters community. What are we going to do? And this is a really hard one I don't have the answer to, but what are we going to do with all the lost coins or coins that just don't migrate to quantum proof wallets? For example, if we, again, came up with a solution today and we say it's about 12 months to get everyone across to that solution, what happens with the 30, 40% of coins that don't move across for whatever reason? They're forgotten, they're in a safe, they're your dad has them, or the Satoshi's coins, whatever, right? Like, what do we do with them? Do we give them a deadline? Do we say, okay, if you don't move in 6 months, they're being burnt? Or, is that even agreeable to people? I think most people wouldn't agree to that. But if we don't do that, they will be owned by a quantum computing company within the next 10 years.
Well, that's okay. That's okay if it is. No, I mean, there's no need to burn any coins or anything like that, because if people leave their coins exposed, they're going to be taken away, right? So
but
you could be in jail, for example, and you can't move your coins.
I think if you play the game through, it's a bit of a risk though if we don't do something, because if you and I are different quantum computing companies and you're ahead of me by 6-12 months and you're like, oh, I've just cracked it, and I'm coming and there's another 100 companies coming with the same thing, and government agencies, Russia, North Korea, who knows what, sure. Right?
Mm-hmm.
Right? What are you going to do? You're not going to just, I think you're going to dump your coins as soon as you can. You're going to sell it and unlock 100 billion.
There's definitely a risk to the price of Bitcoin, and we can't divorce that. We can't separate the price from what most people are concerned about. We absolutely are. Then there's the other thing is are you undermining sovereignty by saying we're going to do something with the coins if they're not moved to an updated protocol or whatever? It's just...
Yeah, it's a tricky one. There's not necessarily a right answer here. But I think we probably need to have could be something broad, like 12 months with some kind of transition phase maybe, or because if you go to that scenario of, say, we don't know what the exact number is, but say it's 30% of coins get sold into, that's not going to be, it's going to be just more than price impact, because the whole value prop of Bitcoin is low inflation or no inflation, the hardest money in the world. If 30% of supply is just being unlocked in 12 months, I don't think this is going to end well. Yeah. Okay.
I think that's probably conflating two different things. I think it's the inflation in available supply as opposed to active supply. It's probably two different things, but I take your point that if suddenly they become active, more coins become active in an unnatural way as a result of a hack, then that poses certain risks to market structure, liquidity, and price risk as well. But I'm guessing a lot of Puritans will say, the number be damned, I'm more interested in sovereignty. There's
good points for both sides. I'm not saying either one is right, but it's going to have a big impact. It's probably going to cause the next bear market at the very least, and it could be the biggest bear market we've ever seen if we don't have a good solution. Yeah.
Speaking of solutions, is there a bit that you think is earmarked to be the most likely solution to this problem?
I don't want to jump in and critique on that because I'm not the right expert to talk to it. I have great respect for Jamison Lopp and his work and his security practices generally. So I'd encourage people to look at and review his BIP and the others out there, and review the code, test it, talk about it, share thoughts on it. I basically just want to get the talk happening. I just want people to start talking about this to get to a solution in advance, right? That's the main thing here, is just getting in early, because either early or it's too late.
Charles, what do you think of what's happening in the market structure right now? We are seeing a prolonged period of, I guess, consolidation after every leg up. You know, the bear market, the bottom of the bear market is a long, long time ago. And then people are still sort of eagerly anticipating a blow off top, but it's just never coming. Every time we go up 10, 15%, it's like, this is it, and it never arrives. Do you have a view on the shape of this cycle and duration as well?
Yeah, so a couple thoughts there. I see us going higher in the next 6 to 12 months, as long as the institutional demand remains as high as it is. Okay, that could flip in a week or a month, and then I'll change my view. But right now, as I mentioned, it's about 500% of supply. So I can just share that. I don't think we looked at that one, but I'll just share that now. Institutional buying. So as a percentage of market cap, the blue line here is the total buying of treasuries and ETFs. And it's about 0.013% of market cap. The red line is the daily mined Bitcoin supply. So this green just shows the difference between the blue and the red line. So basically demand from buying and supply, it's about 500%. So you can very quickly see whenever this is green, so the demand outweighs supply, and especially when it's greater than 200-300%, we get these huge price runs up. We saw similar also this cycle, 40 to 70K, and then again 60 to 110K. And more recently, we've kind of held that for a long time. So there's a ton of institutional demand, and it's hard for me to be bearish as long as that lasts. It could flip, and it can change quickly. So it's something to monitor. That's one very important factor. The other driving factor is just the sort of more macro market cycles, which I like to monitor.
Before you move off that looks like a more persistent buying pattern in the second green wave, whereas the first one was more of an acute. It's not the first one, is it? It's more like it built up to a crescendo. Can you just give us a timing on that? When was that? Was around about December, was it?
This peak,
that
December.
Spike,
so there was a lot of so Trump just got elected here and with this huge rally in price. So I think that's actually a big driving factor. And you can see the main component here is the treasuries. So I think people are like, okay, it's on. Treasury companies are a thing, and Trump's going to allow this. This is time to really launch a treasury company. And we just blew up
that second green wave of buying is much more persistent and enduring as well. It's almost 1.5 times that green spike. Yeah. And I wonder whether or not that's just the new normal.
So we went from about 60 treasury companies to it went up almost more than 50% in a couple of months.
Yeah.
To 100 in that period. So I think there is a really strong institutional bid, and that's fantastic. And I think that's quite bullish as long as other factors remain healthy.
What about the macro picture? What do you see happening there? Because from what I've seen, like the business cycle is about to pick up, and typically that's coincided with the most bullish parts of the Bitcoin cycle. So is it possible that even 2.5, almost 3 years since the bottom of the bear market, that we're about to enter, I guess, a prolonged bull market? It just feels unlike anything we've experienced so far. And so is this time different?
Yeah, a lot of the Bitcoin cycles have also somewhat coincidentally aligned with strong positive liquidity cycles, being basically money supply and the rate of change of money supply globally, but also the US and China kind of money supplies individually being the main driving factors. Essentially, the US monetary policy is replicated globally by Western countries, and so that's the main market to follow. But if you map net liquidity, so the rate of change of global money supply on an annualized basis, and you can also net that off with debt, the rate of the average treasury debt rate. to get kind of a net liquidity view. It's obviously the growth of money supply is somewhat netted off by the cost of debt and capital. And that has always been in the green or positive zone when Bitcoin's had its highest bull markets, and it's always been negative when Bitcoin's in the depths of its bear markets. So I think there is a strong relationship there, and it makes sense. More money, where's it going to go? Risk assets, hard assets like Bitcoin. And growth in money supply has just been very positive in the last 6-12 months. It hit about 9% 6 months ago. It's a bit lower now. I think it's 6 or 7% annually. But that's quite a high rate of growth. Obviously not as high as 2020. We saw the massive stimulus checks through Corona. But it is still quite, anything above 5% is kind of outlier high levels of growth. So total money supply is about 114 trillion at the moment. Again, growing 5-6% a year. That's a lot of money entering the system. I think a lot of it's obviously going to gold, but also equities and Bitcoin. And so that's a really strong sort of kind of back force to monitor. And that plus the institutional demand, they're really two aligning major factors for me. The other is quite interesting is USD positioning. So what I mean by that is the net Forex markets positioning in US dollars versus all other fiat currencies. So that's a huge market. And you can kind of track the relative positioning of shorts and longs to see how the whole world is positioned against the dollar. And we have a chart on that as well. And basically, when the world is net short the dollar, Bitcoin has historically done quite well. It's kind of like it's kind of makes sense. Like if everyone's bearish in the dollar, they're looking for other options, and Bitcoin's one of them. And Bitcoin's big bull market kind of was capturing that in the past, and as has other rallies. It's also quite good for other hard assets like gold, but the world is very net short the dollar still, and it has been for the last 6 months. So that's another third factor I find very important to monitor. There's obviously many other data points, but those three are really big macro indicators for me that suggest there's a lot of capital moving towards hard assets, and it will remain so until those dynamics change.
That's really interesting because I'm seeing so much commentary. There are people who are convinced that we are in the final quarter or so of the bull run, and probably because they're mapping out to what's previously played out in other cycles. But then when we have a look at all the factors that you've just described, it really does look like, no, there's quite a long way to go. How that translates into price, I'm not sure, but it would be quite transformative for Bitcoin for your scenario to play out, because it will have effectively meant the 4-year cycles are over.
Yeah, I've spoken about that quite a lot in the last couple of years. I think they are dead. Like if you have to ask me, gun to head, where we are in 6 months, I think it is quite a lot higher. But like I said, I'm monitoring this stuff day to day, and will adjust accordingly. And these things can change quite rapidly, especially the institutional buying. So I kind of position myself dynamically where I'm almost don't even care about a cycle, right? So I just change weights of what the fund does through algorithms, basically change weights in positions in Bitcoin and other assets on a day-to-day basis, potentially based on the data. And so, I'm not ultra bullish right now. I am quite bullish based on those factors, but there are other things that are not so great in the short term, like technicals and that sort of stuff. But they're more, I think the macro factors definitely overpower that. And that's the main trend. And if you're kind of positioning yourself for weeks and months, then for me, that's the main thing to look at. But at a more granular level, there has been a bit of underperformance of Bitcoin in this rally. That could change again next days, but that means that I'm not at an absolute max position. And there are other kind of risk factors, obviously, which we touched on earlier, that could unfold in the next 3, 6, 12 months that I'm pretty cognizant of and will adapt to. So I think, the Bitcoin cycle as a driving factor is basically irrelevant. That said, there is a big psychological impact of the cycle, right? And as a lot of the OG Bitcoiners have been through cycles, they know the timings of them historically. And if enough people think about it and act on it, even if it's just a little bit, like maybe I'll take 20% off or 30% off, it can be self-fulfilling, right? So we can create a cycle just from psychology.
Well, it's like the CME gap thing, right? There's no logical reason why that I've ever heard of why a gap should be filled. And yet,
Exactly.
I think statistically, it just happens, 80, 90%, maybe 80% of the time. It's like,
yeah, it's herd behavior. And that's like basically the basis of all technical analysis trading, which I actually find is very valuable. And a lot of, Stanley Druckenmiller does it as well. And he's one of the most successful fund managers ever. So the power of the human psychology in dictating these trends can't be overlooked as well. Yeah.
Do you find technical analysis more valuable in the short to medium term, or is it a long-term tool for you as well?
If you're using it on the higher time frames, so weekly, monthly, and obviously with experience and know what you're doing, it's very valuable for, call it 3-6 months out horizons potentially. It's a fluid study, so you have to adapt it as you go. But it can be very good in those kind of trends. It also depends on the market or the asset class you're trading. So what worked for Bitcoin 5, 6, 7 years ago, in many cases, doesn't work today. And that's the evolution as asset class from basically retail and a lot of inefficiencies, not really any futures markets, to a lot relatively more efficient today. Institutional flows. There were strategies that worked exceptionally well in low time frames, daily and hourly, with very high hit rates in, for me personally thinking 2017, 18, 19, 20, which just bleed out money now and don't work. So the lower time frame stuff is just generally more susceptible to alpha decay, because if you can, and that applies to any strategy really, anything that's based on sort of high frequency data, lower holding periods, is more susceptible to competition decaying that alpha edge, because people can realize it more quickly. If you have a strategy that works more or less well for multiple years, right? It could be a macro model or what have you, based on money supply, and it tells you, okay, we've got lots of money coming into the system, so probably in the next 2 years or 3 years or 5 years, risk assets will be higher. That is harder to bleed out the edge, because most people won't sit around and arbitrage for multiple years. And you have then momentum kind of masses and psychology play into it that kind of hold it together. That's why momentum has worked really well for many decades. So it depends on what you're looking at, basically. But to summarize, there are technical strategies, momentum in particular, high time frame strategies that can work really well over longer term horizons.
Are you finding now that the Bitcoin market is attracting a more sophisticated investor, that strategies have a shorter time frame, shorter, lifespan for alpha, and then diminishing returns hit much faster?
Yes. So the short answer is yes for the sort of more simplistic strategies or the more high frequency strategies. So, looking at trends or volatility on hourly level or daily level doesn't really work anymore, whereas it was very profitable. If you go back to 2017, all that was trading Bitcoin was retail traders and using simple momentum models, and there were a lot of inefficiencies. Then the perp market came around between 2019 and 20 and 21. You could basically trade any perp positioning on, be it Binance or BitMEX, and it was 100% hit rate. It was like a money-making machine, where you'd see in the data that the funding rate was high, there's a bit of open interest behind it, and you could just take a short and you'd be pretty much guaranteed that within 24 hours, the market would be way lower, like 5% lower, and vice versa, the upside. So that was like an incredible strategy. And obviously that edge is gone, because the market, there's just so many people doing, firstly, arbitrage of that. So people became aware of the pattern and started doing the opposite. There's a lot more perp markets, so they're arbitraged out. You have people doing the spot perp carry trade, so buying spot Bitcoin and shorting it to get the yield of the funding rates, which is about 10 to 12% a year. That's been basically institutionalized. You've got, altcoins like Athena, which basically that's all they do is they buy Bitcoin and short it and get that yield, and they've got 20 billion or something on that platform now. So it's just so smoothed out. You don't get the masses of retail going in 10x leverage and the inefficiencies of a young asset. We're a much more institutional asset now. And so the simple strategies or the more market inefficiencies are much less. There's obviously still some things out there and different elements that we use, but the things that sort of stick around are the ones that tend to work over longer durations. So what is the main trend over months and weeks? And you see that also in equities, right? So back in the 1950s, 60s, 70s, very simple 20-day momentum strategies were really profitable for many years. There's the Turtle Traders book written about them. They were making millions. Those strategies just lose money today. And we've modeled all that sort of stuff, of course. And essentially longer trends are more sustainable. So the common 200-day, 100-day, there's various different ways of cutting it, week trends. Things that look at price trends over longer-term horizons have basically been stable for decades, even today. But, markets are always evolving and more efficient. So what's common is usually not going to be, what's common knowledge is not going to be as effective. And so there is always alpha decay out there, and there is always market efficiency. So you kind of have to adapt and always be on the lookout for new ways to be creative and get new data and new models built to try and come up with ways to navigate it.
How do you go about trying to spot a new pattern that might give you an edge in your trading? Is it just coming up with a random idea that you've been thinking about, or is there a methodical process that you deploy to see if there are any relationships?
A bit of both. Sometimes you might even see an idea on Twitter, or you might connect the dots between an idea and get some inspiration when you're standing in the shower. Reading books, there's also some really good trading books out there and strategies, which a lot of the stuff out there, 99% doesn't work or doesn't work anymore. But if you dig deep and you model different variations, or you plug ideas into different algorithms, or think about things a bit different way, or you do some kind of combination of assets that you pair trade against each other and then apply the model. There's different kind of ways you can be creative to find new ideas and ways of doing things. Just new data sources, right? There's always new and different data sources becoming available, or you can scrape different data. Like we never had Treasury data for Bitcoin a couple of years ago, or it wasn't significant. Now it is significant, and we were the first platform to really create a whole suite of 30 different metrics on it and made that public. And I think there's a lot of alpha in there, or at least I think they'll be critical for risk management in the next 6, 12, 24 months, because like I said, any spikes in those debt ratios, mNAVs collapsing or percentiles of mNAVs going up, or we're also tracking the relative buying seller behavior. So a lot of treasury companies are doing some sells, but there's quite small volume. So if we can track the relative ratio of that, which we're doing, if that starts to plunge in terms of buyers, all these kind of different factors I think are going to be really critical for this cycle, given it's the main driving force of buying activity. But yeah, it's basically just being creative and open-minded and enjoying it and doing lots of research and modeling and backtesting.
What do you think about the diminishing compounded annual growth rate over 4 years for Bitcoin? And does that portend that Bitcoin really does start becoming more of a savings technology rather than a get-rich proposition for a lot of people?
I think yes and no. Yes, I think that's the value prop. And I think over the long term, 5, 10 years, period buckets of those kind of longer term buckets, I think, the volatility goes down, the annualized returns continue to go down. We've had 40, 50% annualized the last few years. I think probably to expect 25% going forward is probably more realistic. But then look at gold, right? If you compare it to gold, it has years and sometimes decade where it just does nothing or goes down a bit. And then it has years like the last couple of years where it adds 10 trillion or 5 trillion to its market cap. So a lot of the driving factors there are what we've already talked about: macro liquidity and the changes for banking laws of gold, and they're all different avenues that can unfold for Bitcoin if it's successful and if it survives the next sort of decade. And really establishes itself. If it gets to $1 million a coin, which is about 10 plus trillion market cap, 20 trillion market cap, somewhat comparable to gold, it can unlock these avenues too, right? We could have a tight liquidity environment for 10 years where it just goes down, or we could have banks say, okay, you can collateralize everything with Bitcoin, and then it just goes through the roof and goes to 50 trillion in a couple of years. So it's never like a smooth pathway, much like gold, but also equities and startups. Any business that scales from zero to trillions has a lot of volatility in it, and it's never a straight line. But I think, probably the base case expectation is that your annualized forward returns will drop, but there'll be years where it'll be huge, and there'll be years where it's not so big. Yeah.
Where do you expect it to get to? I mean, we're at 2.3 trillion right now, and it's basically a snooze fest. And I read a really good post by my friend Stack Hodler the other day. He said, look, gold is at 27 trillion or 23 trillion, whatever it is at, right?
Around that.
And basically none of your friends or family are talking about it. And that'll be the same thing with Bitcoin. I wonder whether or not that will be the same thing with Bitcoin because, well, first of all, do you think it has the possibility to reach that kind of market cap within 5 or 6 years, or is that something that's really going to be a multi-decade journey?
I think $1 million a coin is possible in the next decade, but there's risks we need to address. Like we talked about earlier, the quantum risk. I don't think it gets there or anywhere near it if we don't solve that in the next 3 years. I think people are really underestimating that. If we can address that sufficiently, I think, we can get to probably $1 million per coin. But unless that risk is solved, it's kind of going to be an increasingly important factor in people's minds. And really, I don't see it as comparable to gold until that is solved, because gold doesn't have that risk. But if you could eliminate all the tech risk from that side, then in theory, it should be more than gold, because it's, a more digital world native, better version of gold with less inflation. So
frictionless with more features, all the rest of that.
And assuming we survive all these main risks 10, 20, 30 years out, I think you're right that it becomes, a super boring asset where no one talks about it, because the success of this asset class is that it's the most boring thing in the world. It captures a massive market size. It's used as a backbone for saving and financial systems. And if you're at 20, 50 trillion, whatever it may be, why it's not going to be moving around a lot, or it'll be incremental changes like money supply, and it's a boring, low volatility asset.
Yeah, I mean, at that point, it really does become fuck you money, right? Where you have a certain amount invested in Bitcoin that you use as insurance against the system, not necessarily your entire net worth, because the returns won't necessarily justify it. There'll be other possibilities for you to invest in that will. I mean, already now we're seeing in the last 2 years, people who've invested in artificial intelligence, in chip makers, in all sorts of technology have way outperformed Bitcoin as an asset class. But the trouble is, how do you pick the winners in all of that? Nevertheless, my point stands, that there are other opportunities for investments.
It's just not going to see the same return profile that it saw if you invested 5-10 years ago, I don't think. Obviously, like I said, there'll be years where the returns are incredible. They'll probably be over 100% again. But, you can't, in 2017, it was a $50 billion asset. Now it's $2 trillion. So the upside is always going to be a diminishing return factor to consider.
Yeah.
Even though gold's done incredible this year, there's still going to be a bunch of tech companies smaller that have done way better. So it's a size issue that diminishes the returns.
Do you know what the market cap of the S&P 500 ETFs are?
I don't have that handy.
It's just popped into my mind now. I just figure for a lot of people, especially older investors who just want to get the outperformance versus what a conventional investment alternative for them would be, like, putting it into an ETF, an S&P ETF, and it's like, well, okay, that's going to give you 10, 11% a year. Well, what does Bitcoin have to do to convince people to get a similar sort of allocation in a portfolio? Because Bitcoin is a similar sort of position for an investor like that, in that you don't have to pick a winner amongst 1,000, 2,000 opportunities. It's just Bitcoin. And the same with S&P 500. You don't have to pick individual companies. You just buy the index, and the index does it all for you.
The ironic thing is, I think Bitcoin has to be way bigger and have lower returns to fit that bill of what you're saying, where it's an equal allocation.
Yeah.
It's really interesting. Like, if Bitcoin goes to $1 million a coin or 20 trillion in the next decade, it's roughly 25% annualized, which is quite a lot less than it has been in the past. Like I said, I think that's a fair assumption. It's still a lot more than equities, right? But people are not in the same boat of giving an equal allocation. I think the longer something survives, the more likely it is to survive. So there's a trust element that will build through time. I speak to people in traditional finance world, and they say that they are more interested in Bitcoin now because they feel like it's been de-risked in terms of institutional interest, legal side, all that sort of stuff. And on the one hand, I get that, but in my head, it's actually higher risk in terms of the risk reward opportunity. But, like when I was all in on it 8 years ago, sorry. Like for me, it was the most obvious trade because of the opportunity for growth and the opportunity to go through that adoption curve. And for me, it's actually somewhat high risk now because it has reached nowhere near end state, right? If it's successful, there's way further to go. But the opportunity set is a bit different for me now. But for the average kind of person, I think that they trust things that have been around a long time. They trust it if their neighbor has it, right? Like, so there's to get to that equal state is probably when, Bitcoin might be 5, 10, 20 trillion, and the return profile might be 10% annualized at that time. And it's similar to S&P. And then like, oh yeah, I'll have 50% in Bitcoin, 50% in, S&P or some kind of, format like that.
Is that probably why we're seeing a whole bunch of OG coins waking up and being, I guess, liquidated?
To be honest, I think so. Like the people I talk to that have been around heavily in the space for, call it 5+ years, have been reducing their allocations. Yeah.
Well, I can't begrudge anyone who's held for that long. You've made the money. It's financially prudent, to be honest, to diversify to some extent and have a little bit of fuck you allocation to Bitcoin. Well, quite a lot of FU allocation to Bitcoin, or at least have an allocation such that your overall portfolio will continue to outperform. And I think if you've been in Bitcoin a long time, you've obviously generated quite a bit of wealth to be able to manage that process as well. So I don't begrudge anyone who does that, to be honest. It's they've earned it. They've taken the risk.
Yeah, exactly. That's it. It's also, a lot of them probably made quite a bit of money, and they're older and they've got other life commitments to think about. Maybe kids, maybe a house, maybe there's just different factors that play into it. It's just, it's this whole asset class, crypto, has basically rotated from a retail asset class to institutional. And that's super obvious now, I think, to everyone. And, like we talked about at the start of this show, we saw it on the weekend when alts went down 60, 70%, Bitcoin went down 15. It's just carried out the bodies of retail, and the institutional sector is totally fine. So, this is a really maturing asset class. It's gone through a step change shift in the last few years, like really significant trajectory change.
Well, the other thing I think about is that, if you've been in Bitcoin a couple of cycles and you've generated quite a lot of wealth, you can't really use that outside the system at the moment. The Bitcoin ecosystem is not mature enough. So if you want to progress your life, you want to improve it in any meaningful way, it's hard for you to actually utilize your Bitcoin in that way. You have to bring it. You have to bring some of that wealth back into the system.
Yeah, we were talking about this offline earlier, that if you want to do anything in the property space, it's still a nightmare with Bitcoin. I think it's a lot better in the US, from what I understand, but even still, yeah, in many cases, you just have to liquidate in many countries today in order to gain access to that, because the traditional banking market is not accepting of it, or it's just not quite there. It's getting closer, I think. I know of several companies also in Australia that are setting up processes to do that, but it's very much in its infancy. Um, so yeah, you're right. People need to get cash for different things in their life, and it may well be in 5 years that picture's very different, right? And you could recollateralize back in Bitcoin again.
If you've got $200-300 million real estate portfolio and you own that outright, for example, no debt, you can easily refinance that at, withdrawing 3, 4, 5% a year, and a bank will refinance that for you, no problem. Bitcoin, if you've got a similar amount, how are you going to do that without liquidating? You have to sell, right? Because the rate at which you're going to be borrowing is going to make that prohibitive at the moment.
That's true. So there are options to do it. And the two problems with it are, the rate of borrowing. You have to be able to get, over 10% at least yield return to justify it. And you have still, in most cases, some format of liquidation risk where if Bitcoin were to drop 60, 70%, you have to be on top of your game to cover that risk. Otherwise, they'll basically take everything. So you can obviously risk manage that and structure it so your loan's a lot smaller. But it is still somewhat complicated. I think these are the sort of things that if Bitcoin's successful, will be basically nutted out over the next decade, and it should be a pretty comprehensive market, I would say.
So what do you think needs to happen before we see more options available to Bitcoiners, people who've accumulated quite a lot of Bitcoin wealth and want to be able to use that in a similar way to other assets?
I think it's simple as time and accommodating policy. So, the ETFs only launched a year and a half ago. We're only just going on this institutional adoption wave, and the more capital in these banks, and I know a lot of the banks in the US are already doing this kind of loan system collateral options privately, right? We've had some offers on this space which just did not exist a couple of years ago. So they're starting this journey, and these are big banks, and I think it's just going to really grow with time, and as the asset class grows and trust grows, and as the legal system and political system supports it, right? So we have that now in the current administration of the US, but that doesn't exist everywhere in the world, not in every country. And I think time and having the right leaders in place, that just kind of unlocks.
Do you think as we see more institutional funds flow into Bitcoin through various vehicles, that they're going to want to utilize their holdings in a more traditional way? They want to borrow against it. They want to put it up as use it as collateral, for example. And as a result of that demand, we'll get those options develop more in the market.
I think so, yeah.
At the moment, we're still seeing in the private market, I think prices are still, well, when I say prices, I mean rates to borrow against your Bitcoin is still up to 14%. I mean, you can get as low as 9% for certain amounts and durations, but it's more or less over 10% for a lot of people. I had a chat with Mark Moss in Prague, and he was of the view that that's actually fairly standard private rate of borrowing, 14%. And he said that, your mortgage in the United States is basically government subsidized. And so that he wouldn't expect Bitcoin rates to go down. My position was that Bitcoin, if it is pristine collateral and has a lower default risk, it should be priced cheaper than a conventional loan.
I think it will come down with time. It's also tied to opportunity cost. So I like to kind of benchmark things off the funding rates, because it was historically, until very recently, the biggest futures market in crypto, and it's still massive. It's just that options are a bit bigger now. the cash and carry trade, right? You can get 10, 12% a year on average. If you do things smart, you can maybe get up to 20%. But rewind 2021, that was, people were getting 40, 50% a year on that strategy. So it's become more efficient, and I think that will continue coming down. It's all these factors converging. Also, the forward returns of Bitcoin dropping, in my mind, to say 25% a year and then lower again in the future. All these it's going to just slowly merge into the TradFi market or equities markets in terms of, and gold in terms of opportunity costs. So it'll normalize as it gets bigger, and I think that those borrowing cost rates will drop a bit as well with time to something more comparable with bonds. Not as much, but closer to that.
When you talk about opportunity cost, is the fiat lender and the Bitcoin borrower, are you looking at them both as having an equal opportunity cost or separately? Are they both comparing it to Bitcoin returns? Because I would imagine the fiat lender would be looking at other instruments,
Yeah, I think they're different points of view, and it's just kind of this asset class maturing to a state where they converge, basically. So, like, if you wanted to borrow against Bitcoin 10 years ago, you'd have to go to some private, they wouldn't give you 10%. It probably would have been 20%, right? It would have been some official means. And I think it's just the convergence of those markets and then becoming more efficient that gets closer.
Yeah, and I think as we're seeing it become more of a mainstream investment vehicle, I think that will inevitably happen. But I just wonder at what scale that starts to happen. Like, we're already seeing now at 2.3 trillion options start to be developed. We're seeing all the major banks in the United States go into custody. Soon they'll probably want to develop some products as soon as they see how much wealth is actually tied up in their customer accounts. We're seeing in the United Kingdom a bit of bank panic where the banks are obviously seeing how much money is flowing to these Bitcoin and crypto exchanges, and they're doing everything within their power to frustrate a user. So a friend of mine tried to send £500 to an exchange the other day, and she had to go through a 15-minute lecture. It's basically a lecture. They try to make it like it's fraud mitigation, but I know through personal experience, I sent an identical amount of money 2 days in a row to the same account, from the same account, bank account, to the same exchange account, 2 days in a row. And I had to go through the exact same process for 15 minutes. There was no circumventing it. There was no telling them, I've already been through this. We went through it yesterday. I know exactly what I'm doing. It's an old account. These two accounts have been tied together for 5 years. There was no circumventing what they wanted to do, which was go through this process for 15 to 20 minutes of frustrating me so that I don't actually end up sending my money over there, or I give up entirely. It just feels like they have a completely adversarial approach to the industry in the United Kingdom, whereas in the United States, we're now seeing the embrace by the banking sector of Bitcoin to facilitate what the client wants to do. And I think that's a huge step towards normalizing Bitcoin products, Bitcoin lending, Bitcoin transactions. All of that is just going to become an embedded part of that.
Yeah, and a lot of that is I think political, sadly, because it was the opposite a year ago. Some big, the crypto native, the two biggest crypto native lending products, at least historically, have been Ledin and Nexo. Nexo left the US 2 or 3 years ago in Choke Point 2.0, and they came back just this year. And I think this would be a very different world today if we had different political outcome. And I just think it's not on the radar of most political leaders globally, or it's just not an interest factor yet. Hopefully that will start to change as the asset class grows. It's kind of like, if something's big enough, it's the elephant in the room, you have to do something about it, to address it. So fingers crossed we'll catch up to the US.
I think it's inevitable that something has to change here. I don't think they can continue doing what they're doing. But it's been one policy disaster after another since the financial crisis here, which is, that's stretching out to be quite a long time now. That was 2008-9. And we haven't had competent government, competent policy here since then. And it kind of makes me wonder how it ever got to a position of being the United Kingdom and London in particular to be a global financial leader in the first place, because it's just been a disaster. And I don't see it changing anytime soon.
There seems to be a trend globally of overregulation of everything and innovation. I'm thinking right now of UK, Europe, and Australia. And, Musk has talked about this, that there's too many laws for everything. And he, historically he'd have like a world war or some kind of reset point where most laws would get wiped out and you go back to the basics. Whereas now that the world's a lot more peaceful, luckily, on net, hopefully, we just have this accumulation of more and more laws and restrictions and taxes across everything. We're taxed like 18 times for every bit of wealth we use and how we spend it. And everything seems incremental, and it does make innovation harder to do, I think, on net. The US seems to kind of navigate through that really well generally, but there's still a lot more restrictions today and less freedoms, I would say, than 50 years ago, like significantly across all facets of life.
To me, it feels like it's accelerating, though. It doesn't feel like it's just a continuation of what's been happening at a normal pace without an event to clear it out. It feels like an attempt to assert control in an environment that's unraveling. That's what it feels like to me.
I totally agree. And I think the, Corona was the really big trigger point for that, wasn't it? Where all freedoms were taken away based on no science. It came out, I think it was a year or two ago, that there was zero science or reasoning behind the, whatever it was, 2 meter separation and the masks. Like,
oh yeah, that was rubbish. Yeah,
but the studies were conclusively against it.
Yeah, I have to confess, for the first lockdown, I fell for that one, and then after that, I'm like, what are we doing? Like,
it's just unbelievable how many decisions now are made through complete lack of evidence and for whatever reason, some kind of political driving factor or control factor. I could talk about this for hours. It's a bit of a diversion.
We should talk about it because, I was telling you earlier that I set up another account called Radar Hits because of my, I have broad interests in all sorts of things. And as a result of that, I engage more in geopolitics and what's happening in other countries in terms of development science. And increasingly what I'm finding is that actually the future is being built in China. It's not in the West. And it's not just, a new train station or a wonderful shiny bridge or whatever. We're talking academic publications, scientific breakthroughs, infrastructure rebuild, and really quite advanced. They're not building things just to catch up to the level of the West anymore. They're advancing further. Like, I don't know of any Western nation that has fast rail, genuine fast rail, that rivals Japan or what China's been building over the last 15 years. In the UK, we're trying to build just one line from the north to the south, and it's like triple over budget, 10 years and it's still not functioning. 10 years.
I totally agree. There seems to be like a general political wave in the West of trying to make absolutely everyone happy, no matter how niche you are, whatever issue you have or subset of the population you are, instead of like focusing historically as we used to do on the greater majority and the,
building the nation, right?
Building a nation, families, as opposed to XYZ, whatever you are attributing to. I won't go into the details, but I think we've become obsessed with pleasing everyone. If you please everyone, no one's happy because all the rules conflict and there's no kind of clear pathway. Whereas in a lot of the Asian countries, I think it's definitely an alignment of what's the greater good and, whether you agree in whatever the good is, but they're trying to get to basically alignment of the whole population on bulk, but not focusing too much on any individual niche.
Yeah, the greater good is a worthy pursuit, and I think it starts first of all with functional and competent institutions, and no more than government has to lead the way. Like that has to be the starting point.
Yeah.
Of competence, right? And I think we're all free market capitalists and whatever, but you do need competent government policy as a framework for the free market. You do need that. I know a lot of people say, no, you need no market, no government, or as little government as possible. Okay, that's fine as a philosophy, but in practice, like you look at who's winning at the moment. It's the Asian countries that are winning. It's the authoritarian regimes in the Middle East. Okay, they've got a lot of cash. They're the ones building, right? And they seem to be winning in the capitalist markets as well. Like they're building their national champions. I don't see that happening in any way. It's kind of like
the growth trajectories are really different. I agree. Yeah.
I mean, if only we could just build fast rail, like just build infrastructure, right?
Yeah.
We can't even do that anymore, and
because of the regulation, everything's so costly to do, or you don't have the labor costs. Yeah.
Well, it's not even regulation. It's corruption. It's ineptitude. It's almost like an inability to manage a project, like really basic skills. And what I said the other day was like, we're becoming more authoritarian. China's becoming more capitalist. The only difference is they're more effective at being authoritarian and capitalists, whereas we've lost the ability to be effective capitalists because we can't build anything. Like we can't affect any decent industry policy. We can't affect any decent infrastructure policy. Our schools are not as effective as they once were, and they're certainly not world leading anymore. I mean, they're world leading if you compare it to like third world, but if we're aspiring to be the best, we're not in that realm.
It's gone the complete wrong direction. Yeah,
I feel like a curmudgeon old grump now. The world's gone to shit, but it's just like I just want competence as a starting point.
It's just so I suppose it's most shocking because of what we're seeing in our life, right? Like you put your mindset back 10, 20 years ago, and longer, right? The change has been significant and mostly not in the right direction, I would say, in terms of relative to the rest of the world, as you mentioned.
Yeah, I don't see that ambition anymore. The unifying ambition has always been to build a better country. And that starts with infrastructure to me. Like you go on the tube in London, you can't tell me that's world-leading infrastructure. It's not, right? We can't even pretend that. And even the things that they build is just like, it's over budget, over time.
Yeah, like simple thing, like Australia is such a simple thing, but Australia had great roads 5 years ago. And we're one of the highest paying tax countries in the world. And now you ride a bike and it's like dodging potholes like a third world country. I'm not even joking. Like,
are you serious?
I ride a bike to work pretty much every day and it's a nightmare. Like they had bike lanes, but you can't use it because it's like literally driving off road if you've got a road bike. So it's become more dangerous because of that as well. And it's just like we're paying a huge amount of tax and we can't even get the roads right. It's just because they stopped allocating budget to it a few years ago for whatever reason, because it's allocated to 10 different things
But that doesn't even make sense because Australia is leveraged both the Chinese demand and like the developed world as well, right?
Yeah.
So that's even worse.
Yeah, it's pretty embarrassing. Yeah.
Yeah, deeply embarrassing. Okay. Anyway, we've done enough complaining. Is there anything else you wanna talk about, Charles, before we
I mean, I think we covered pretty much everything.
Let's finish off on a positive note. Give us something positive to finish up on. Give us your projection for the next 6 or 12 months. What do you think is going to happen?
If the conditions remain as they are, as I mentioned on the macro side, and the demand for Bitcoin, with it stripping supply by 500%, that's the the easiest way I can simplify it. If demand is that much higher than supply, we have to go higher. So, watch the data, of course. It can always change, but it's a pretty strong trend and it's held for weeks. And that's kind of my optimistic outlook.
I'm just looking at the price action right now, and it's heading back down to test support at 110,000.
Yeah.
So what did we hit the other day? 103.45, something like that.
Yeah. So I'm giving the optimistic outlook, but I do have some concerns, as I touched on throughout this show, and I think they need to be addressed pretty soon.
Definitely.
Yeah, on net, I'm optimistic on the next 6 months, but not as optimistic probably as I was 6 months ago.
On that note, Charles Edwards, thank you very much for joining us again, and look forward to next time.
Thank you, Archie. It's been a pleasure. I look forward as well.
And just before we go, can you tell people where they can find you, your website, handle?
Of course, yeah. So run the Caprioli Fund, so caprioli.com. We have an analytics and chart platform, which we had a look at the start of the show, caprioli.com/charts, and on Twitter at caprioli.io.
Thank you very much, Charles. Till next time, always a pleasure.
Till then, cheers, Archie.
Cheers, man.